This is the exact systematic process that I make sure that I and my traders use to not only get funded, but to stay funded and maintain consistent payouts on their portfolios. The same system that I use to manage business investor capital in my hedge fund group. This video is going to hand feed you my exact rule-based system that is going to tell you what to do in every single scenario, completely removing all of the guesswork from your trading, giving you crystal clear clarity and confidence in approaching live price, consistently allowing you to trade at the level of the top 1% so that you can successfully trade capital at large scale. No more relying on luck, no more having to abuse risk management, and no more having to suffer the emotional battle that comes with just trying to fluke and hope that you pass a funded challenge and hope that you can get one lucky trade just to get that payout. I'm not just going to help you get that flashy, shiny funded certificate. What means the most is making consistent payouts on these funded accounts, because at the end of the day, as traders, we are businessmen. We are here to make money. And those shiny certificates mean nothing if they're not doing our business any good. And that is what I am interested in helping you and instilling that into you. It's a simple flowchart diagram where you check off each thing on your list. And as soon as one thing is missing, the trade is invalid. And as soon as they're all there, the trade is valid. And that's where we either do this or we do this. No doubt, hesitations, or emotions coming in between our decision-making process. So without further ado, let's dive into the first section where we're going to put all of this together. The 5 simple technical criteria checklist. And I've put this into a very neat flowchart for you guys in today's video. And I'm more than happy to send this to you towards the end of this video. So make sure to keep watching. I'll show you how you can go and download this just to keep this as a checklist system for this model when you're busy backtesting and proving your edge with the strategy. We follow through each and every criteria from the beginning. Criteria 1, if it's there, we move on to criteria 2. If it's there, which I've got yes or no, we move on to criteria 3. Yes or no, move on to criteria 4. Yes or no, criteria 5. And that simple checklist system is what's going to decide whether we should execute or not. All right, no more feelings involved, no more trading based on when we think price is going to go or where we think price is going to go. We now have a disciplined, rule-based strategy that is backed and proven by data that decides when you trade. And if any one of these criteria simply tells you no, whole trade is invalid, delete everything and move on to the next setup. Let's start off with criteria number 1, structure. And I've created you guys a PDF, which also I will leave a link in the description if you want to go and download this, just to master the basics of market structure. This is going to be really quick. It's really simple to understand. I'm also going to give you a done-for-you tool that is already on TradingView. So just to explain the basics and the logic behind it, market structure really underpins the fundamental concepts used in a trading strategy. So if you can master market structure, it's a lot more simple to identify your trend. As the good old saying goes, trend is your friend. As I've got in the 2 examples here, a bullish uptrend and a bearish downtrend theory example. So what most will see, a bullish trend line or a bearish trend line, support resistance being retested, or market structure. There's multiple ways that you can identify the trend. But again, we keep everything rule-based so that we know exactly where we're working within and that we know our structural range is correct. So whenever we see a previous week high or a higher high broken to the upside, price would have created a low point that created that break. And the anticipation is after every break of structure to the upside, price will incur a pullback phase into areas towards the strong low with the expectation of protecting the strong low and targeting the new week high. And the expectation is for this to continue until we shift bearish into a bearish downtrend. Vice versa, where we're then creating lower highs, what we call stronger highs, that creates a break of structure to the downside. So the main focus point that I want you to pay attention here is strong structure. Strong structure is a high or low that's broken a previous high or low, and that we call a strong point. The anticipation of price is to protect those strong points. If I pop up a live example over here, we'll see it's not necessarily as neat as the theory example, but what we will see is a break to the downside, that pullback phase. The high that then creates that next break of structure to the downside creates the new strong high. New pullback phase, new break. Strong high, pullback phase, strong high protected, weak lows targeted in a bearish trend. And if I put a zigzag tool onto the actual candlesticks, you can see that much more clearly. I'm going to open up a live example over here on TradingView. Now, to really make this short, sweet, and simple, come over to the indicators tab, type in zigzag and you will see the zigzag technicals tool here. You can add this to your chart. My settings is as follows: 0.1 and 10 with the first bar and the fourth bar checked and the middle 3 unchecked. And then I've got a second zigzag tool, which I've got set to 3, which shows my swing structure. So essentially what we can see here is our larger swing structure and then our smaller internal structure, because remember, structure can happen within structure. Smaller structure can be a part of much larger structure, which we call our internal and swing. So with my rule-based strategy, there are 2 types of setups that I take. There are swing setups and internal setups. So coming back to the structure criteria. All right, right now, what can we see on AUDUSD? We've just had a swing break to the upside. Swing strong low and our swing weak high point here. So we know we've just had the 4-hour swing break to the upside. By the way, technicals is only on the 4-hour time frame. No other time frame is involved. So now we know we have a strong low and a weak high in our previous break. So what would the anticipation of price be? Well, to incorporate our 4-hour swing pullback, which we can see our internal structure is still currently bullish. I'll zoom into this now. So as soon as we get that bearish shift, this can be confirmation for the overall 4-hour swing pullback. And when that starts going bullish, that could be confirmation to target our weak highs. Okay, so there's a simple tool on TradingView that's going to do this for you. Now, if I enable my internal structure and I zoom in here, what do we see on AUDUSD internally? Well, we had a break, pullback, protecting that strong low. New break, new strong low. Protecting that strong low after the pullback, strong low protected. New break to the upside, pullback, strong low protected. So what is the anticipation of price? To target our weak highs and to protect our strong low. Clearly identifying we're currently in a bullish trend on AUDUSD. Once you have structure on your chart, we can now move on to criteria 2. Like I said, structure is already going to be done for you. So criteria number 2 is we need to identify a previous strong high or low that has been swept or taken out. So if I come back to the charts and I'm going to draw a theoretical example here. All right, as I've just explained, our structure story is now happening on AUDUSD. We're bullish. Now, what we need to see for criteria 2 is a previous strong low, a low that has broken structure to the upside. Okay, we need to then see the sweep of that strong low or the takeout. It can be a wick or a candle closure. Both are valid within the rules. So right here, we've had our bullish trend. We've had a sweep of that strong low. So once we see that, we can then tick off criteria number 2. Yes, come over to criteria 3. So criteria 3 is also fairly simple. After that sweep, we need to see, again, the opposite side break to the upside, which will look something like this in a theoretical example. Once we have that opposite side break, we have a check. We say yes. On to criteria number 4. Criteria number 4 is an order block with volume below the 71 fib level. So we take our fib, this is criteria 4, fib from the low that was created after the previous strong low sweep, that then created the new break of structure from the low to the high. These are my settings as follows: 0, 81, 1, and 71 level. And what we need to see is a candle that has created immediate volume, being a fair value gap, a explosive move, imbalance. There's many different names for it. At the end of the day, it's all the same thing. All right, we need to see that candle that has created anywhere below the 71 level, our imbalance or our volume push. So once we have criteria 4, criteria 5, fairly simple. Set our limits on our order block. Stop always goes at the 1, and we target a 1 to 2 risk to reward. And that's the rule-based model in a simple theoretical example. Let's quickly go and have a look at 1 or 2 live examples. I'll go through my journal and my track record with you and go over a couple of examples of trades that I've taken in the past couple of weeks. And then we'll go over our fundamental checklist to decide if this technical setup is high probability and if it's valid or not. Okay, so quickly coming over to my journal for 2025, I'm going to go over let's start off with these last couple of trades. There's still 2 that I'm in, waiting for that to play out. But coming over to Bitcoin, I know exactly which setup that is. Let's go and recap that on Bitcoin longs that I took the 31st of May, so just towards the beginning of June. And this is a simple trick that you can do to find the most recent setup. So just start off with your most recent structure. So here I can see most recently we've had a break to the upside, a strong low. All right, and let's go and ask ourselves, was the strong low? We have our structure, criteria 2. The strong low that formed, did it take out previous strong low liquidity? Well, here was a strong low in the past that we swept. So we know this is potentially valid. So coming back to the previous setup that I took, backtrack again. Previous break to the downside, strong high. Did the strong high sweep a previous strong high? If I look to the left, no, it didn't. So that's invalid. All right, previous structure, break to the upside. Strong low, the weak high that then created that pullback. There's our structure story. Criteria 2, did the strong low that created the break sweep or take out a previous strong low? Well, if we look to the left over here, we had this low taken out, and this low broke structure to the upside. So there's a strong low that was formed after a previous strong low sweep. So really, to explain the science or the logic behind this, I'm pretty sure you've heard of this comment before, and you can comment down below if you have. Institutions place their orders where retail puts their stop losses. And that's exactly what we're taking advantage over here. Because again, like retail is taught in a bullish trend, these lows are where they're going to be buying from. These from previous strong protected lows, from support zones or resistance zones or a trend line, whatever it may be. But think about it logically. These lows also then potentially can be the strongest form of liquidity. Often what you will see is in price, structure won't move as clean as just a beautiful bullish market like this. It will more move in the means of this. A break, then a break to the downside, a bit of a range, then a break to the upside, pullback, break to the upside, a break to the downside, then a break to the upside. So this can get quite confusing, right? How do we know if this is a bearish shift? Because then here we have a strong high. People selling here, they're getting stopped out, right? And same thing again here. People selling here getting stopped out. People buying here getting stopped out, right? And then same thing here again. People selling up here getting stopped out after this break to the downside. So it just becomes a manipulation mess, okay? But when we see these strong lows being swept or taken out, it's a very good indication that there was a lot of institutional involvement in this area. And the demand levels that are created after these strong low or high sweeps are the most interesting areas in price that tend to get the strongest reactions. So we are then using that to our advantage to get into these strong reactions in price. Okay, so that's just a little bit of the logic behind that. So coming back to Bitcoin here on our previous setup. All right, we now have criteria 2. Criteria 3, the opposite break after the sweep. So here we had the strong low sweep, price then ran and broke structure to the upside. So there is criteria 3. All right, yes, criteria 4. Fib from the low to the high. And let's go and find our order block with volume below the 71 level. Well, if I have a look here, we can see this whole red candle and that wick zone created an immediate explosive move with still remaining volume. Volume, again, fair value gap, same thing. And what that essentially is the top. It's a series of 3 candles. Candle 1, 2, and 3. It's the top of candle 1's first wick and the bottom of candle 3's bottom wick. And where those wicks are not overlapping, that's what we call our volume or our gap. And what that means is, it means the zone is fresh, it's unmitigated. It hasn't been tapped into before. Okay, so 5 technical criteria is there. Limits on our zone, stop at the 1 to 2 risk to reward. There was that last position that I took on Bitcoin for a Nice 2% gain. If you're still struggling with the concepts of the technical rules and the 5 technical criteria, I've created a 7-day mentorship series with me that all you need is your name and email, and I will send you each lesson for over the next 7 days. It's a free opt-in and free mentorship for anybody to attend. There'll be a link in the description that will go over the technicals and everything together far more in depth. Let's quickly do one more example before we hop into the fundamental checklist. Let's go over one more win, and then we'll go over a loss as well. So EuroCAD, which I took on the 2nd of June, which was a B setup 2 out of 4, and then EuroJPY shorts. So let's come over to EuroCAD. So what I was seeing towards the 2nd of June, which was tag in here. All right, we had most recent structure, a break, a strong low, and a weak high. Okay, again, 4-hour time frame only. Criteria 1 is there. Let's come back to our checklist, just so that you can grasp the criteria over and over again. You will get to the point where it becomes muscle memory and you can start to see it without even marking it up. It's like learning a new language. You know, when we were all young, we went to school and English or our home language classes, and we learned how to speak over the years. And today we can speak without even thinking about it. And that's because it's a part of us. It's a part of who we are, and it's a part of our muscle memory. And it's the same concept here with the criteria. Okay. So structure at this time, we had a strong low, weak high, and our break to the upside. So we know we're in a bullish trend. That's it. The trend does not matter what price has done in the past. What matters is what price is doing now. Okay, so coming to criteria 2, did the strong low that created the opposite side break, sweep, or create itself after a previous strong low takeout? Well, just mark out the lows that this low is taken out, here and here, and then just ask yourself, which low created the break of structure to the upside? This low didn't break the previous high, so that is not a strong low sweep. This low did break previous structure to the upside. So this would be your strong low sweep. So therefore we have criteria 2. Yes, on to criteria 3, which is after that strong low sweep, we saw that opposite side break to the upside. There's criteria 3. Criteria 4, fib from the low to the high. And then our order block with volume, which was this green candle right here. Which created our explosive volume move here. Right there. So now we know all of our technical criteria is there. Valid to enter, stop at the 1, 1 to 2. Risk to reward position. That was the most recent trade I took on EuroCAD. With that being said, let's continue to our fundamental checklist to determine why these setups were valid and why they were high probability of running. So with that being said, let's come over to our next set of rules, which is our fundamental rules, the underlying driving factor in the markets that 90% of retail is not able to see. Myself as an institutional trader with a hedge firm, we can see some very insight, what I like to call X-ray vision, into these markets that I've created these tools to work for you on TradingView as well. So now that we know, I'm going to stick to the same example here on Bitcoin. Let's come over to our initial setup. Right here on Bitcoin, I'm going to leave the markup here. All right, I'm going to quickly just replay price as we coming into our limits, and now we're kind of imagining our fundamental alignment before we get tagged in. So we know our technicals are there. First thing is first, our technicals need to be there before we can do fundamental analysis, because we're not going to trade fundamentals if our technical rules are not there. So on Bitcoin, technical rules are there. So next step is looking at our 3 fundamental rules on the daily time frame. We have 3 sets of fundamental rules that we need to look at. Now, I know there's quite a bit on my chart here, and it can look like quite a bit, but once we know what we're looking for, it's actually super simple to align this together. Okay, so the 3 sets of fundamental tools that I have here is my MM-funded forecast, the true seasonality forecast, which my first chart on the left-hand side, this is just a double layout of my chart. So it's the daily time frame, each side on Bitcoin. I have it set up like this so that not all my indicators are just racked up on one chart sort of thing. It just looks nice and neat like this. Okay, so coming into this demand zone, all right, on my 2-year seasonality. What can we see? Well, we can see coming into this low, we are forecasting a nice bullish reaction. Okay, so just to explain what the seasonality forecast is and to put the logic behind this so that you can understand why this is such a powerful odds enhancer for your setup. The best analogy to put this, much like our human year-to-year lives, right? In the beginning of the year for some, it's summer, we're at the beach, flip-flops are out, we're having cool drinks, it's hot weather, we're at the pool, we're having beers, and we're sweating, and we're outside doing outside activity. Later on in the year, it becomes winter. Now we're inside, we're having fires, we're having hot chocolate, warm food, cuddling up, and just staying warm. And then again, repeat the next year. It's summer again and all over again. It's a reoccurring, repeating cycle in our life. And very similar reoccurring cycles happen in the markets. Presidential cycles, cycles in the COT reports, valuation cycles. And this tool is able to read all of this information and predict a very accurate forecast on the future of price. And that is why this is one of my most favorite odds enhancer tools for my setup. So again, coming into the zone, we can see bullish forecast. And this is all I'll do. It's a simple checklist system. We give this a tick. So let's move on to the next. On the bottom left-hand side here, we can see the Funded valuation tool. These 3 lines that you're seeing here represent 3 different markets. The green line is the United States dollar. The purple line is United States Treasury bonds and interest rates. The yellow line is the gold market. Now, these 3 markets together are really the economic powerhouse of the world. And when we see price overvalued or undervalued to this economic powerhouse, we tend to get the strongest reactions in price. All right. And even if I just zoom out and kind of mark them out here, all right, undervalued down here with a nice bullish seasonality forecast. And look what kicked into price. All right. And just to show you that this is not based, these indicators don't read past candles. It reads live fundamental data. So even at this point in time, we can see before the move happened, it was already forecasting for it to go up. So it's not delayed, it's not printed late or anything like that. It doesn't even read the past market data. All of these fundamental tools have nothing to do with reading anything from the charts. So again, over here, undervalued. What did we see? If I put a line here, vertical line, undervalued, stronger correction, into overvalued, slighter weekly correction, overvalued, stronger daily correction. Again, overvalued, stronger correction, overvalued, stronger correction. Now coming into undervalued, stronger correction. So that we can clearly see here that the undervalued areas in price, here again, are getting the bigger moves. And why is that so? And that's just because the nature of Bitcoin is a predominantly bullish market. Okay, so coming into the setup, right here into this demand zone, we could see right as we got tagged in, again, if I put another vertical line here, we were nicely undervalued, which is a very good confluence for the position. So we give this a tick. Okay. And then finally, on the 3-year, if I come over to this side and just quickly play back to this candle, my longer term seasonality forecast, we can also see a strong bullish reaction was anticipated and forecasted off the zone. So this is also a tick. And this is our 3 out of 3 rating, our 3 simple rating process on the daily time frame. So now we know this zone has a 3 out of 3 on the daily, and our last set of fundamentals is on the weekly time frame. So I'll come over to Bitcoin on the weekly. So what you're seeing on my chart here on the left and the right hand side is the net positions of the only three players in any market. Our users and producers, which are our non-commercials, retail players, which are you, me, and people all around the world, fund managers, which are banks and longer-term investors in the market. And then the bottom 2 here is my index, which kind of versus them against each other. So here we can see what retail is doing against commercials. Here we can see what commercials are doing against the institutions. And I just want you to pay attention to this. I'm going to show you exactly how you as a retail group are manipulated out and are wrong on price. 90% of the time. Let's have a look at the last bull run on Bitcoin that happened in 2023, where we ran to the record highs. And I want to show you how the institutions manipulated out the retail before the move happened. All right, so if we have a look at this point in time, we can see really that, what can I see here? Well, if I look at what the institutions are doing, and I draw a line from this live point in time. So this day was the 26th of June, 2023. And I draw a line across and have a look at where they are in relation to their past market actions. I can see at this point in time that they were record buying power on this market. They were never this bullish on this market on Bitcoin in the history of the existence of Bitcoin. And have a look at retail. Retail was super bearish. They hadn't been this bearish on Bitcoin since 2021. So that was a 2-year bearish extreme, right? And if I unreplay price, what do you think happened to price at this time? Their buying power kicks in, retail starts panic buying, and then we see a multi-month sell-off. Same thing up here. We saw commercials super bearish, retail super bullish, multi-month bearish run. And then coming into these lows here, super bullish retail, super bearish commercials. And again, with the commercial guys, we saw new record buying power, which is why in the last few weeks, we've seen record highs on Bitcoin. And we can see this information here and how retail, aka guys like you and me all over the world, have been trying to sell this entire leg, blowing up our portfolios and just being wrong 80% of the time. And there's millions of studies done on it. If you go over to FXCM, all the major brokers, literally the first notice on the top of their website is that between 70 to 90% of retail investors lose their money. And we can see these exact net positions here. So you may ask, how exactly can I see these net positions? How accurate are they? They are accurate to the T. And the best way to explain this is anybody that earns an income in their country, they have to submit their income to their tax regulator. USA would be IRS, for example. It's very similar in the trading world. As an institution or a business, you have to submit your trading actions to the CFTC.government website, where those reports the exact positions that you're in a given market. And those reports are public for anybody to view. So what I've done is I've created a script for TradingView that extracts the information from those reports and prints those reports into a nice chart view here on TradingView. I can see right now commercials are at 1,949 contracts net bullish long in the Bitcoin. Each contract worth tens and hundreds of thousands of dollars. Same thing with retail. They are minus 2,300 contracts short, net short. Each contract worth hundreds and hundreds and potentially thousands of dollars. The rule of thumb is for COT, in order to be in alignment of this, is when commercials are bullish, retail's bearish, we want to be long. When commercials are bearish and retail's bullish, we want to be short. So coming back to this technical setup, coming into this here, we can see at this point in time, commercials were super bullish, retail was super bearish. So we can give this a tick. Okay, so now coming back to our rating. On the daily, we have tick 1, tick 2, tick 3. On the weekly, tick 4. So this was a 4 out of 4 A+ setup coming into this. Now, the rule is, this is the simple rule behind this rating system. 2 out of 4 equals your B setups. 3 out of 4 equals your A setups. 4 out of 4 is your A+ setups. On a 2 out of 4 setup, I don't take anything less than a 2 out of 4 setup. If I'm taking a 2 out of 4 setup on the point, on the dot, break even at 1 hour profit. So if we run 1 hour in profit, we set stop loss at entry to reduce and remove all of the risk on that trade. So 4 out of 4 trade on Bitcoin, and this is why this was a valid A+ position. And we can see that strong bullish fundamental bias now kicking in. So by now, you should have a good idea of the technical rules and how we validate if that's valid or not with our fundamental rating system. So once that's in place, that all decides for us when we trade and when we don't trade. And I have a very good saying with any strategy, not just this strategy. If you want to be profitable upon a strategy, It's not in the strategy itself. The strategy is the easy part. The hard part is executing upon it with discipline long term. And let me put this into a bit of an understanding for you. If I or Warren Buffett put his strategy on the front page of the Wall Street Journal, I mean, Warren Buffett makes billions with the way he trades. 60 to 80% of people that trade it won't be profitable because it has nothing to do with the strategy itself. It's all in the discipline in you. And let me put this here in a bit of a mathematical understanding, right? Your performance, your long-term performance, we'll put your results, your long-term results equals your strategy's performance minus your performance. So what this means is, let's say the overall strategy, if you executed every setup to the T, made 8% this month, okay? But you were lazy, you weren't on top of your pairs, or you let your emotions creep in and you didn't execute all the setups. And we only executed half of them and made 2% profit. All right, so even though the strategy made 8%, you only made 2%. Now your results is the strategy's performance minus that. So that means you are missing 6% from your edge. Now this gap is what we call our performance discrepancy gap. And the difference is between failing traders and the top 5% is all that the top 5% have done is they have made this gap as small as possible. Most of them trading probably even a simpler strategy than what you're trading. It's not. Being profitable is not all in what you're trading. It's how you trade it. And how do we eliminate this gap? Well, that's why we have rules. We have rules that decide when we trade, removing all the discretion from our trading. With that being said, if you guys want to go and master the strategy to the T, learn how to trade it profitably long term and make this gap as small as possible, I'm going to leave a link to my Tuesday and Thursday webinars with you guys where I create a quick 30-minute webinar where I go over each and every setup that I'm looking at for the week and just keeping you up to date on the pairs, keeping you on track, that you can also practice seeing it yourself. Tons of backtesting sessions here as well, trade recaps of the live trades that I've taken. So all of this is a free invite link in the Discord server, and in the higher time frame model section here, you will see the 7-video curriculum over the next 7 days, which is the free opt-in mentorship for anybody to join, and then access to my fundamental tools over here with a 2-hour fundamental course going over these 5 fundamental tools. So with that being said, guys, I'll leave 2 links in the description, a Discord invite link to this Discord server, it's lifetime free, and then a link to the higher time frame model mentorship, what I taught you in today's video, which is free lifetime opt-in for anybody to join. Take care, guys. I'll see you in the next video.